talk about the magic of compounding. A long-term perspective is something that is encouraged, that I would encourage for people wanting to enter the stock market. Let's say you're 30 years old and for the next 34, 35 years, you want to be active in the stock market. And let's say at 30 years old, you've saved up $10,000. The long-term expected rate in the stock market is certainly bigger than 8%, right? But if you put this 10,000 in an 8% type of instrument, compounded 8%, that 10,000 over time will be worth $136,901, right? 10% is a realistic number that they tell you to think about as well, right? So 10%, $10,000, 34 years. Math is pretty simple, right? It's raised to the 34, $255,000. Not bad. So you start out at age 30, and at age 64, you take out that. Many 30-year-olds have saved up $30,000. You've been in the workforce for 8 years. If you haven't started yet and you are 30 years old, put away $1,000 a year for the next 10. Start at 40 years old. 34 years later, at 74 years old, at a 10% rate, you'll get $255,000. Now, there's no promise of this, right? But this is generally what people talk about as a stock market rate of return. The magnificent investors might do 15%, and then you start to see how you could become a millionaire over 34 years. What I want to talk to you about today is someone who is able, or two people who were able together, to generate a 25.7% rate of return over that period of time, 34 years. $10,000 would have become $23.8 million. So if you put $10,000 with them in 1978, bought the stock, it was publicly traded, followed them straight through to 2012, and just hung on, that $10,000 would be worth over $23,800,000, 34-year period. Two gentlemen did it. The gentlemen were Ian Cumming and Joe Steinberg of the Leucadia National Corporation. It was a publicly traded company. When they took it over in 1978, the market price per share was a penny. When they ultimately sold it into Jefferies, they converted into Jefferies, which is currently publicly traded, $23.79. So your penny in 1978, right? So a 30-year-old person in 1978 turned 64 with Mr. Cumming and Mr. Steinberg retiring with that 25.7% CAGR, $23.79. Now, that 25.7% compounded rate included some years where the market price changed pretty dramatically, right? 1987, the stock market crash, right? You'd gone from a penny to 47 cents. Stock market took 43% out of your savings there. Let's look at another year, 1998. A nearly 9% decline. 2001, an 18.5% decline. 2008, a market crash. Leucadia wasn't immune to that, 58%. 2011, there was a 22% decline in the stock. But over time, what was a negative shareholders' equity when they got started compounded into $6.7 million. And over time, the market price per share compounded at 25.7%. So even with these very difficult, very tough years, a 58% drawdown, you still ended up with this result. I encourage you, and they are available, to find out what Mr. Cumming and Mr. Steinberg wrote about. They were geniuses, obviously. They created this kind of performance, the kind of investments they made. I want to give special thanks to valuebuddies.com. I found the collected letters of Mr. Cumming, Mr. Steinberg, the Leucadia annual letters from this period of time, from 78 to 2012, that give you insight into how these guys thought about markets. There'll be a lot more. I'd like to cover some of those, so please stick with us. If you like what you see, don't forget I'm offering classes. Please comment below.